Bank of America Securities analyst Vivek Arya joins us now, maintains a buy rating on Nvidia, price target of $1,100. So, Vivek, do you see this as just the stocks needed to cool down?
Yeah, I think, Sarah, this is the ninth or 10th time in the last 2 years we have seen Nvidia stock have a 10% or so correction. And every time it has done that, it has inevitably been a good opportunity to relook at the stock. Because fundamentally what's happening is that we are going to have at least a 4+ year build out of the AI deployment infrastructure across cloud service providers, across enterprises. We are still in the second year of those 4 years. So anyone who is trying to call this as a peak, in my view, is being too premature. So the size of the opportunity is growing. It can be 250 to 500 billion annually. We are still less than 100 billion of that. So size of the opportunity is growing. Second, their pipeline is extremely strong. Today, a lot of the AI infrastructure has been built on a product that they conceived during the COVID time. Generative AI was not even a thing at that time. It's really the new product Blackwell that is coming out that we think is really custom designed for generative AI, and that will just start shipping in another quarter. So larger opportunity size, a much stronger pipeline. And then the third and most important thing is valuation. We think Nvidia is the cheapest large cap growth stock in our coverage. It's selling for under 30 times for an earnings growth rate, which is 40% plus, right? The S&P 500 is trading at 2 times price to earnings growth ratio. Nvidia is less than 1 time. So we think increasing size of opportunity, better pipeline, and a very compelling valuation, and volatility is just, part of the game here.
Wonder if investors are worried at all about competition. Vivek, we got that news yesterday from Google announcing its own sort of ARM-designed CPU chip. Is that a threat here to names like Nvidia?
Yeah, I think competition is going to be there since the AI market started. We have seen custom chips account for about 10 to 15%. Nvidia has consistently managed to keep 75 to 80%, and we have seen nothing that changes that view. Google has been designing their internal chips, actually designing in collaboration with Broadcom since 2017. And since 2017 to now, Nvidia's data center business has probably grown 20 to 30 times. So Google designing their own chips, I don't think is anything extraordinary. In fact, the CPU part that they are designing, CPU is something that Nvidia doesn't even sell to them. So I don't think that CPU announcement really should have had any implication on Nvidia. The other interesting thing that I think sometimes gets forgotten is that if you look at who is ahead in terms of monetizing generative AI and large language models, it's companies such as OpenAI, Microsoft, Meta. And if you look at who has been the largest adopter of Nvidia chips rather than custom chips, it's OpenAI, Microsoft, and Meta, versus others who have relied more on internal chips. So is that just a coincidence, or is that really a correlation between the faster adoption of Nvidia products and the success that these customers are seeing in the monetization of their generative AI infrastructures?
So do you think that their hyperscaler partners, the ones that are spending all this money on AI, will be able to go elsewhere to another competitor or develop their own like Google's doing?
Yeah, I think that we will continue to have this mix because there is just a wide range of workloads, right? The large cloud companies have internal workloads, for example, search, monetization of their video infrastructure. But then they also have public cloud workloads, which are faster, which are growing. That is where enterprises are working with them to set up their own generative AI training and inference. And that's the part that NVIDIA does extremely well, because it has this really large base of deployed hardware based on their CUDA operating system. And that is what incentivizes enterprises to come and ask for NVIDIA-based hardware when they come to these public clouds. But I think the big picture view is that accelerators is a $100 billion market. We think it doubles in the next 3 years at least. And in that, NVIDIA maintains 75, 80% market share. And we think that the rest of the industry will have 20, 25% market share. So there will be a range of choices, but I do think that it's a large and fast-growing market, and NVIDIA's competitive position is getting better.